Okay, let's do some analysis of trades taken by members. So what you see on the screen is a chart of DAX30 traded by the beautiful Emma, and she has been trading the 1 minute chart, day trading the DAX, fantastically trying to find her mojo, and more recently she started using the KC method. The reason I'm making this video is that, you know, when I come up with something like this, I feel like it's very easy, very simple thing that I can communicate with people and they would just take it. But then when I look at people's trades, and I mean, thank you for posting this. A lot of people don't even bother, and that's why they never become good. So what I see on this chart, what I'm going to do is I've set up this chart, and then I will click and I will go to my chart the way I would see it. So let's say that's the London Open. Let's see, I think it's over here. There will be slight differences. So right at the London Open price, the first candle was inconclusive. As you know, I'm not trading the M1 for about at least a couple of weeks at the opens, because what I'm doing is that I am, well, let me not go through that too much, because there's another video today, or if you go to the blog, I've posted how I do it. Basically, I want to trade well, I can't help myself, can I? I want to trade those levels, and if you look at it, the KC, it's telling you that the market was up, then it pulled back, you know, reversion to mean, and then it went back up all the way to the top and above those levels, and almost and it touched the all-time highs over here, right? Let me actually put the line on there. So see how beautiful it becomes. So that's the 19th of April, and I'm on the H1 chart. Now if you're on the 5 minute chart, right at the open, see what's happening here? Very easy. But anyway, let's go to the M1 first. I'm going to talk about this in a bit. So let's use the bar replay function, and let's start at the London Open. So this is what you would see at the London Open. Now, what information do you have? I mean, how do you trade? Okay, so if you're trading the KC method, what you see is that there's an uptrend, but that uptrend is now being challenged, right? It's turning around. So you have a big wick. Really, you can't do anything here. So let's go to the next. Further down, but not really any more strong information. Now what we see is that actually it's turning around. We have a bull candle, but it's hit the 20 MA. So let's go to Emma's chart. What has she done? So she's gone short here. Oh, that's actually cool. That's cool because I think she's gone either at the touch or limit order short. Okay, and then the market has gone down, hit those levels, and come back and hit her stop loss. So what she was trying to do is actually let it run, whereas the perfect scenario here was to actually scalp it. Let's go to our chart. So you see, if you made that entry, this was your target because of two reasons. I know it's very easy in hindsight, but that's how we learn. Look at these levels. Price has hit it once, huge tail. You've made a beautiful entry here, and that was a perfect scalp. But obviously you wanted to let it run on the 1 minute chart, which is sometimes good, but not in a situation like this. I don't like to let it run when I see first candle like this. Okay, you want the first candle to be a strong bull or bear trend candle. Then you can do something about that. Anyway, let's go to the next one. So then price goes up, pulls back. So she's considering this as a pullback, and I think she's gone very aggressive. 2 entries, 1 and 2. But I think the entries she's taking is that when the market is going down, during that phase, she's actually going long. She's not waiting for any confirmation, which is good and bad at the same time. So let's see how we would have seen this. So here, another confirmation that this was the end. That's it. You're out now. If you didn't take profit, you're doomed. Okay, so now what you see is that a very strong bull trend candle. If I saw this and it closed over here, I would have gone long. But the fact that it's closed right next to the high, but I can't really say that because in my case, it was different. I was trading the, but if I was trading the 1 minute chart and I saw on the hourly chart that there was a possibility that there is more space for going up, I would have actually gone long there, but most probably not, because one, it's close to these levels, and second, very big candle. It's come all the way from here to there. Still can be taken with a bit of caution. So if I took this and I had seen that there was a longer term level up there, then this was a good scalp to take, or I would wait for it and see if it turns into something big. But the next candle clearly says no, we are in confusion. And the candle after that, well, actually it's kind of like bullish now, because the bears were destroyed, and then it continues up. So that's your 2 candle pullback, and your 2 candle pullback allows you to actually go long. Okay, so a nice 2 candle pullback. Definitely, if you're not long from here, you would go long here if you're doing pullbacks, right? And then what happens? Crash straight away. This is where I went short for my swing trade. See, my analysis, which you would have seen in the other video, or if not, I posted a signal for swing trade, and we went short somewhere here. The idea wasn't to go in 1 minute or 5 minutes. It was just the price over here. I wanted to see if it reacts to that, and it did react. So I was watching another 5 minute chart like so, and then when I saw these 2 candle pin, I actually went short. I think I was short even up there. So, but the purpose of this video is actually to check Emma's trades. So she's very keen on going long. Oh, okay. So she's actually going long while this trade is going. So I'm going to ask her if she's been using limit orders, because for this, you don't want to trade climaxing markets. Like this is a climax. This is 1, 2, 3 strong bull candle. Then you want the market to actually slowly come to your middle, not very strong move like this, because this is a bear trend candle. This is a strong indication that the bulls are losing. So you don't want to go long there. Okay, so if you saw this after that, there is still like a chance of going long. You can go long above this and have your stop loss here. So that would make sense, which either triggered or did not trigger, but you immediately got your answer that your longs are not working. So that it comes all the way down. So, I mean, you can see the ideal spot over here, because it was, stretched. As you can see, that's what the volatility meter is for. It comes out of the volatility and is stretched, so it's going to snap back. Okay, so where were we? We had a bit of a distraction. So down and up, so that's the sideways market created, right? We are here. I've done it many times, and you can do that too as well. If you see that the market is going this way and it comes back here, you can actually go long here. Around here, when you see that it's challenging the outer band of the KC and hitting those levels, and if you think that the market might stay in this range, you can go long, and your stop loss is very clear, just below this level. In this case, it would probably have worked. So by this time now your stop loss is at break even. And around here you probably take your profits already. So now we have a higher high and a lower low, but this is not equal. Well, we'll consider this as a double bottom. So you went long, so we are in a range. So if it comes over there, if you were to come this level, it would be a nice spot to basically short. But if you pay attention to these trend candles, this is a breakout and this is a breakout inside the range it's creating. But if you look at this pullback, it's gone higher than the middle. But if you look at this, this is actually, this was our now we know, at that time it was difficult, but now we know that this was an excellent spot to actually go short. If you went short here, your stop loss would be up there, and that's what I did for my swing trade. And it goes down. So if you saw this candle and the strength of this, and you see you went long here, and so I'm digressing a little bit again. I'm also talking about how to buy the bottoms of ranges and sell the higher ranges to increase our profitability. Very difficult to do on M1 because you know the speed of it. Okay, let's go back to her trade. So obviously this was not a signal for her, but this is actually a signal because you see the strength of this move. Now if this had gone lower than this would be a lot easier. Then I know you would have gone short, but even in this case we could have gone short, and then we had another opportunity here which you probably were not sure because you thought this was the low of the range, which is not a bad decision. And then when it breaks out, we are in the game. Your best entry is here. I remember shouting about this. So you see, as soon as this happens, you're out of the range. Let me point. See that's your range. So as soon as you realized after this that it pulled all the way down, did not go below this, went up, did not break that, you're in the range. Now you want the breakout. Breakout was very clean. As soon as it comes back up, 2 candles, test that level, holds it, I'm going to be short here. If I go short here, my stop loss is up there or somewhere there, because I know that if it comes back and closes inside, I'm not interested. The breakout has failed. If you didn't take that, then this was your entry below this, and that's the best trade of this morning. So if you're trading the 1 minute chart, and if you're trading just for half an hour, 1 hour, or if you want to trade the 1 minute and want to scalp, you shouldn't take those trades and you shouldn't take these trades. You should wait for the range to break out and then take this pullback entry. And if you took one of this, that's it. You don't need to do anything else because your daily profits are done. And I think we talked about this a little bit. Let me actually talk about this. And this is the main thing that I've been doing on M1. On M5 I want to do it as well. You want to find a range, point number 1. Then you want to see if it breaks out. If it breaks out of it and then it pulls back, you want to take that trade. The market will always have, it will stay either in a trading range or in a trend on any time frame that you see. So on this time frame, it was in a trading range. Inside the trading range, there were breakouts, there were trends. So if you were gonna split this bit and this bit on a 15-second chart, actually let's just do that. Why not? We have the ability to do. Oh, let's delete this line. So if we just focus on this bit here, and if I go to the 15-second chart, and if it allows me, you can see that the 15-second chart had a breakout as well, and then there was a pullback on it, and then price went up, failed to break, and it created a major trend reversal. So you can see a big trend candle hits those levels, pulls back and continue to go down, and guess what it's doing? It's going through the channel. So you see the distance between the KC's lower band and the center is the bear channel. The distance between the middle and the upper one, when it's sloping, then it's the bull channel. So think about them like this. Here the bulls are making money, here the bears are making money, and the bulls are making money and the bears are making money, but mostly the bears are making more money because it's going more in their favor. So let's go back to the 1 minute chart, and I want to emphasize on something that is let's hide KC for a second. Range, right? And first you have breakouts. Within breakouts, you don't see many big candles, or you don't even see bull candles at all. These two are very, very small. So that's your breakout, right? Actually, let's delete this bit for now. When a breakout happens, and when there's this first major pullback, you would often see it turn into what we saw on the 15-second chart, a channel. And that channel, you can see it with this. But because it was too volatile, the channel is going through, moving averages are not always accurate. But the trend lines are in your hand, or your view, you just see it. You can see it. If you look at it now, that was a tight bear trend. So let's, you got to give it to the TradingView platform. So much power in it, but very expensive. So here you have a bear trend channel. It's not a breakout, it's a trend channel, and then it breaks out here. That's your exit using this mechanism. Otherwise, if you have a 10 EMA, then you exit there. If not, then it closed on above the center, which is a 20 EMA, you exit there. And of course, you know that once I got my entry, in my previous video I talked about this as well. So even when you have a trend channel on one time frame, a tight trend channel, this could still be a breakout, with consecutive candles on a higher time frame. If we go to the 5-minute chart, see this? Where are the lines disappearing? Oh, look at that, they just disappear. Funny, huh? Okay, go to the 5-minute chart. Maybe it's something to do with, yeah, it's something to do with that, because we're doing bar by bars. Forget bar by bar. We just go back and forth. So you can see the lines on M5, it was one gigantic breakout. Okay, let's delete all of it. And that same thing. So on M1, what we see, where did we just go? We saw on M1 a breakout here and then a trading range. And that entire breakout and trading range is a breakout on the 5-minute chart. So let's mark this. We go to the 5-minute chart. Unbelievable. It just disappears. That entire phase is a breakout phase. See, no pullbacks. No bears can make money on this time frame. But we can see on the 1-minute chart that there is actually a little bit. See those wicks? And then that same fractal, a breakout, then turns into a trading range. Look at this. A trading range, not a trading range, sorry. My bad. A bear trend channel. Let's duplicate that. Clone it for me, please. Yes. And now we'll move it. As you can see, it turned into a channel. You don't have to draw perfectly or anything. It's just for understanding the market. And that channel continued throughout the day until the US Open, when it went out of it. But why am I not including it? It's where you consider these as, it's like a tail. So a tail can be out. If you combine the two candles, it's a tail. So the tail can be, it's what L. Brooks would call the outshoot or undershoot, something like this. And then it goes out again, which actually creates an climaxing market. And I got out here because my whole target was yesterday's lows. So the yesterday's lows were hit the swing trade was successful. Anyway, let's go back to MS trade. So that's one trade, and you took it. That's it. Don't mess with it. I don't understand this sell. It's a bullish trend candle going on, and you're selling. You're realizing your mistake, and you get out quickly. But then you got back in. Listen to me. The problem with M1 is just this. I've seen it with many, many traders. We should be trading our signals, but we shouldn't always be trading. And this can turn into very ugly as well sometimes, as you're going in and out, in and out, in and out. It happened to me just a few weeks ago. I destroyed the account, and I traded so many times, and I was thinking, why was I doing that? Because you get into that groove, and then you start. I know that didn't happen to you. You were just trying to trade. So these entries, then I don't understand. I think these are mostly impulsive entries. This is an impulse entry. What you should be doing, I think, what I would like to do instead of that. I mean, I'm trading the 1 minute, the 5 minute chart instead of that anyway. But let's go to KC. So you took this trade, you got out, and then you got in here. So to refine this, I think it's best to, when you see a strong move like this, you would expect it to turn into a trading range. I actually posted that in the chat room as well. So after a strong move, it will probably turn into a trading range. But if you do want to go short, go with at least one bear candle. So around here, if you went short and stop loss up there, it would make sense. And then be ready that if is it going to break the low or no? If it doesn't break the low, then your dilemma is, do you want to stay through when the market goes sideways, or do you want to get out? In my case, if I was short here, I would get out here, and then I would mark this area. Let's bring that to this, and I would say, okay, we have gone into a trading range because this failed. And then when this failed, I know that we are definitely in a trading range, and I don't want to trade breakouts because breakouts fail. Look at this. When you have a trading range like this and you see something like this, you actually can scalp this long. Then you can only trade when it breaks over here and then pulls back. You can take another trade, but that didn't break. So we went back into a trading range. So let's delete that and bring another one. So then that's your trading range again, because no lower lows. Then it breaks it, but fails. So you're still in a trading range. Continues to stay in a trading range all the way. So if we understand how the market behaves, trading range and trends and stuff, then we don't need indicators and stuff. We just understand price. Then it breaks out, pulls back. This is where you would be shorting it, and then look at it. It stayed through the bear trend channel all the way down until it touched the outer band and then turned around. So you get out here. Comes here again, fails to break that. So some sort of a trading range happening, but then breaks out and then pulls back. So you could have shorted here. You have a bear candle. But obviously that's then US Open, you're waiting for US Open. I think I want to check some of your trades on the US Open, which were a bit crazy. Okay, so is this a short? So that short got in too early. Or was it a buy? So I don't get it. Okay, let me see. 21. 21 is it's a sell. I think trade direction is missing. 21, 22. 22 is a buy, or is it a sell? Let's see, I'm a bit confused here. 22, 1, 2, 3, so that's the setup. Too close to US Open. Yeah, true. That was a sell. But I think that's too much anticipation here. You are not waiting for a confirmation. So like, you know, when you were short here, you should have waited for this to happen and then actually gone short here. You have a nice outside candle. Even on this one, if you were still bearish, let me go to my chart. See, with this, right at the US Open, it was a beautiful short available because, you know, price tries to break those levels and those levels, fails it, hits the high of the, you know, the upper band, creates a nice pin bar, you go short. There's an excellent scalp opportunity all the way down, pulls back, this is your short again. I was, at that time, it looked like shit to me. It looked really rubbish, but if you look at it, it's actually down, up, and down again. So you've gone short here. Oh, hold on. Yeah, you took a nice short. Your stop loss should have been there. But you got out because you did not like this going against you. Okay, that's fine. Then you got back in, but here you lost discipline. When it touched over here, I thought, no, so you thought, you should have taken your profits. Why are you doing this? Let's move to break even. Don't want to lose on this one. Fine, makes sense. But it went down. And a short here that went break even, and then you went short here again, and then let it run all the way up there. This is wrong. So 27. Okay, I see what you're doing. I see what you're doing now. So I froze 1640, 25, number 25. So I got it. And compare all of that to this one trade on the FTSE. Strong one, that's your two. So you want these two differences. You see, impulsive move, and then your correction has to be kind of sideways, not back up. So if we go to my chart and we bring FTSE, not that, this one. And on the 5-minute chart, hold on, was it 5 minutes? UK 100, M5. Oh, that's from yesterday. Yes. Yes. This was a beauty, because what I saw was beautiful move down, and then the flag that it created here was very orderly, very beautiful. So as soon as it breaks here, you go short with stop loss up there and just let it run until you see exit signals, or when it turns into a trading range, you get out. I think you over traded. If you're trading the 1-minute chart, take 2-3 trades to make 1-3%, and then call it a day. If you want to let it run the rest of the day, I think the M5 chart is better for that. Let's have a look at US 30, what's happening right now. So we had a huge move, as it happens, and now it's going sideways. So that's a trading range, a very ugly trading range. But if you look at the hourly chart, it has its own trading range, and that is why I was short on the US indices from that level, because when it's creating a trading range, the best thing is to sell the highs and then get out here, and that's what we did. I think not on US 30, not on Nasdaq, but on US 30, my entry from there was very easy, and it hit the target point like a joke. The DAX was the same. I traded on the 5-minute, targeted those levels. These two swing trades, because I managed them on M5 like so, I went here, then there, and there, and then I kept looking at it at the, you know, something like 15-minute chart like this, and I would have gotten out there anyway, but the target point was hit. So that's it, 120 point from this first entry. I think this is better. I think M5 allows us to actually have a little bit of time, and especially because you're not trading the setup one. Setup one on M1 is like trading pullbacks on the 5-minute chart. So if I'm on M5 and I don't employ any of those techniques, you know, like the swing trading techniques that I applied and stuff, and if I just have this LOBOT, I would wait for the market to start trending, and then when it's a pullback, I would enter here. This was my add-on. My stop loss would be somewhere there. Then after that, just trail the 20 and get out here. So how much is that? From there to here. 76, is it 76 bars? 6 hours and 20 minutes. It's a nice day job. You know, you started your work here and then you ended your work here and you got paid about 80 points. So if you had £10 a point, that's £800. If you had £1 a point, that's £80. So I think if you go with 2, that's a good day's job work, you know, good payment. So that's it. That was analysis of trades of the members. The beautiful Emma, her trades. She's getting better and better, putting a lot of work in this, and I think very close to becoming a really seriously profitable trader. Thank you very much for tuning in.